Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 27th of September, comes to you from London. And quite a bit of green on the screen this morning, just a little bit of a relief rally after the woes we've seen in the last few days. Of course, sterling has been the big story. I posted a chart on LinkedIn this morning. These are all the trends and targets on the 1 minute chart, and this is really how you watch the picture unfolding, remembering you can just vary your box sizes by playing here, so you can get the longer term picture. Interesting how that 102.70 target, if we break below that 106.40 level, we activate that another further 5% downside. So quite scary. That's the level we need to hold. And so just watching that, of course, and you can go as small as you like to watch the trends and targets develop. Looks like there's quite good support on the very, very short term picture. So watch that on your systems. So looking at the dollar, we see here the dollar is, of course, looking strong still on the long and medium term charts. And we're seeing here just flattening short term. We've got an interesting tassel going here on the short term chart. If we break below that level at sort of 113.20, we activate a target to 111.04. That's about 2.3% lower. If we break to new highs, that's another 7.5% higher. So it's all about activating those targets. If we look at the euro, sitting at 96 cents 30. No big surprises there, of course. We've been bearish on the euro for a long time. So it's not just sterling that's been falling away. Euro had a pretty terrible week when you look at that weekly candle last week. And these downside targets still hang over the euro too. So the story about sterling is possibly just a little bit overblown. This is happening pretty much across the board. We are seeing the dollar falling back against the yen, but of course that's just in the short term. There was a little bit of intervention there from the Japanese bank, the Bank of Japan, on last week, but realistically it hasn't changed the picture at all. Looking at sterling, we're up 1.2% this morning, back above 108. And these levels are really critical. This tells us something, but of course the parity targets have been there for a very long time, so they're just there. Against the euro, we're sitting up 1% at 112.26. We saw that spike there. No real clear downside targets here, so the picture is less clear against the euro than it is against the dollar. And if we look at it against the Aussie currency, we fell away here at 166 as well. We touched 160 at one point, but so dollar denominated currencies are tending to do a bit better. Bitcoin is back above $20,000, so that's looking a bit more positive. So that's quite key. And if we look at the S&P 500 index, we're down a further 1% last night. So US stocks now clearly below the cloud on the weekly, and of course if we break this low that we saw in June, which looks inevitable given the targets, we are clearly in bear territory. Lower highs and lower lows, the Dow theory tells us that we are in a new downward bear trend long term. It's just the beginning, and the targets give us where we're going. And the same on the NASDAQ, of course, that's there. We are seeing the futures up quite strongly today, up 1.3 on the S&P and 1.4 on the Nasdaq E-mini. So it does tell us that we will open quite sharply higher today. And the VIX volatility is pulling back to 30, but still above 30. The fear index is fearful when we're above 30, of course. The FTSE future is up 1/3%. The DAX in Germany up 1%. So market's just seeing a little bit of a relief rally, but this downward triangle on the DAX is a concern, and of course we are below the clouds, so we're only going to see relief rallies within a downtrend. Looking at Asia, the S&P 500, the S&P Sensex index, that's really been one to watch. Can we break and activate this target? Looking better than most markets, still holding above the weekly cloud there. Looking at the Aussie market, that was only up 0.4%. And again, we have fallen through the weekly cloud here, so not looking great for Aussie stocks. We'll look at the energy mix in a minute, but soft commodities up quite sharply today. Wheat up 1%, corn up 0.4%, and gold sitting at 1636. We are still in the below the cloud on all three time frames there, so not looking great. And of course, yields, looking at 10-year yields, Will we start to break this column to give us an activation? That's what we're really looking for. Not happening yet on the 1%. On the 10% yield, same thing. We need to see a pullback, and then that will lock this column, giving us a new upside target, but we are going higher. Taking a look at the energy mix just quickly, we got Brent crude. The daily chart we're bearish, and the 60-minute chart we're bearish. We are up this morning 1.8%, but realistically we are seeing a bit of a fall away there on crude oil. Taking a look at WTI, we're up 1.7% here. We actually went neutral today purely because it looked like we'd bottomed, and we had some mixed targets on the 1 minute. US nat gas looking stronger, up 2.7%. Again, we had some quite good upside targets this morning. They've been met and passed. Whilst we're above 7, we're looking better. Finding support there on the lagging line, which is looking quite good. Looking at coal, we're down a little bit here, but the short-term trend is breaking. The long-term trend is still bullish. Watching for these downside targets to be activated. Emissions in a very clear trading range at the moment. We're seeing that there. We can put that trading range on the chart just by going and putting on the key levels, and we're seeing here 64.10, 73.90. That's the trading range given that low that we saw yesterday, so that's quite key as well. Looking at gas prices, TTF is up 5%. MBP wasn't looking as bullish as TTF this morning, and we're actually down 0.3%. So quite interesting there that is just unwinding. And looking at German power, we're back on that 500 euro mark on the cow. Really just wants to stick to that 500 euro mark like glue. That's it for today. Until tomorrow, happy charting. See you then.